Hey, this is Matt from InvestiQuant. Today is Wednesday, January 12, 2022. Yesterday, the market saw some follow-through from Monday's reversal. On Monday, we made a 10-day low and have since bounced. We have continued higher on Tuesday, and we're currently trading a little bit higher here in the overnight session as well. So what we'll look at this morning is this bounce type of pattern coming off of recent lows. Let me go ahead and select all four instruments. The setup will be based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading higher in the overnight session. I am going to add that to the test by going to the opening filters, gap direction, gap up. I've selected that. The next thing I'm going to do is head down to the price patterns library, and I'm going to say that yesterday was an up day following a 10-day low close. So yesterday was an up day, meaning it was a green candlestick. It closed above the open. The day before closed at a 10-day low. I'm going to grab that from the active today new lows section here for day after up day following 10-day low close. And then I'm also going to say that we closed up near the highs of the session. So I'm going to do that by clicking close in top 25% of daily range. You could also use top 10%, but I'm going to use top 25 just to grab a few more samples. And then lastly, in the indicators library, I'm going to put us in a similar market environment. We're still below a 10, but above a 200-day simple moving average. Now I can click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. When you gap up following a day that was an up day, so a green candlestick that was on the heels of a 10-day low close. It also closed in the top 25% of its daily range, and this is taking place in a weak bull market environment. Historically, we've got 65 samples in the S&P, 57 in the NASDAQ, 60 in the Dow, 57 in the Russell. If we look at the win rates on them, a couple of them are fairly favored. S&P coming in 60%, the NASDAQ the best of the group at 63%, Dow coming in at 53%, and Russell pretty neutral at 51%. If we look at the average moves, the average loss is larger than the average win for the S&P, so bigger moves to the downside there on the S&P. That's not the case for the NASDAQ. It has larger average moves to the upside. With the Dow, it is larger average moves to the downside, and with the Russell, larger average moves to the upside. So very mixed there on the average moves. It's been 2 and 2 there for average moves being larger on the upside versus downside. But the win rates on these are at least mildly favored on a few of them, and the Russell being the one exception that is neutral. So a little bit more favored towards the long side here, with the S&P and NASDAQ being the strongest. Hopefully you found that helpful. Good luck today. We'll see you next time.